What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 3rd of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about the massive moves we've been seeing in big technology stocks like Meta, which moved up over 23% yesterday, gapping up to new relative highs since as far back as June of last year. And I want to talk about the growing divergence between this upward movement in equities and the lackluster momentum over the past couple weeks in crypto. Could this be an early stage sign that it's either time to go all in, that the bear market is finally over, or have we really started to see early stage signs of lackluster momentum, signaling that we've got a correction in the near term? We got a lot to dive into today's video, as well as a sponsored review of AngelBlock, a really exciting infrastructure play in the crowdfunding space for crypto. So stay tuned for it. You guys won't want to miss it. All right, so let's go ahead and talk a little bit about the price action we've been seeing here. As you guys have probably heard over the past couple of episodes, if you guys are watching the channel religiously, which I always appreciate when you guys make the time for during these daily updates, we talked a lot about the idea that this has not only been the biggest relief rally we've seen so far, or at least recovery from a relative new low in this bear market, but on top of that, we do believe there is a chance for Bitcoin to slowly inch up towards around 65-70%, getting above that 200-week. Once we've started to see that we've gotten this beyond the 200-day, this would be the next thing to see. We'd want to see us getting up to that range, being able to come back down either to the 200-week or 200-day, making it long-term support, and then continuing higher. But either way, I just want to signal here that why we, again, still maintain a bearish thesis in the long term. Don't doubt the reality. Don't try to short too much too early. This rally, like the rally in equities that we're going to be talking about here, is likely focused on causing as much pain as possible to shorts, liquidating as many people as possible, convincing as many people that it's time to go long and reverse on the opposite side of the trade, and therefore institutions take advantage of it, right? I think that, again, this is the range that where you cause max pain, essentially. You'd get rid of a lot of the short positions, you'd liquidate a lot of players in the market, and I think that there's a good chance we could see this. It's pretty typical that as time progresses, relief rallies can either be relatively similar or in some cases stronger than previous ones, as we'll take a look at the NASDAQ later on back during the dot-com bubble. But I want to go ahead and come back to crypto a little bit later. What we've got to focus on here is the price performance in equities. We had the biggest upward move in the NASDAQ for a long period of time following supposedly strong earnings from Meta and Amazon and a lot of the big tech names like Apple. And the big thing I want to focus on is really Meta as we go throughout this conversation. But again, it's not just the NASDAQ here. We also have the S&P 500 moving up 1.4%, with the Dow Jones really only being the one index. This is, again, very tech-sided rally or gap up, what we saw yesterday, as a lot of the tech stocks have started to really make significant double-digit returns. And the Dow Jones, on the other hand, which has more defensive plays, has some of the larger industrial companies, sitting at minus 0.1%. So really unchanged since yesterday. Again, this is really signaling that markets are starting to question whether or not we're in the next bull market. And it's very telling here in the performance of the indices, because the defensive stocks, the inflation hedging stocks, companies like Procter & Gamble, Coca-Cola, the big defensive plays that make up the Dow Jones, those stocks are starting to go sideways. They're starting to make lower highs and lower lows and fading some of their momentum. Whereas on the other hand, the S&P 500, which covers 500 of the largest companies, or the NASDAQ, which covers thousands of major technology companies from small caps to mid caps and large caps, it is starting to signal a risk-on mentality. Now again, when I say this, I don't want you guys to think that I'm absolutely FOMOing in, that I'm, oh my gosh, we were wrong, guys, the bull market is in. The key thing we need to understand here is that the market makers, the participants in the space, the institutional investors who drive price action and are offloading or buying large portions of shares, they essentially want you to think with emotion. They want you to FOMO in, and they also want you to short at the worst possible time, right when it looks like prices are about to break down. Notice how when we came down to those previous lows, that's exactly the point when it was time to go long. And vice versa here, when we get up towards this line of resistance, or we come up towards previous points where we clear through it and people think, oh my gosh, it's the start of the next rally, especially when we get above those major moving averages, right? When we get above the 200-day, this is where a lot of people are starting to think, oh my gosh, this is it. This is the beginning of the next bull market, especially following the Fed's comments and the supposed hints at a pivot that some people spotted back during the previous FOMC meeting. The big thing I want to emphasize, though, is that this is what allows for max pain in the market. This is what allows a lot of people to get trapped when we get up towards certain price levels. And I think, again, this has got the momentum. It's got the grounds to potentially continue a bit more here, right? It could go a little bit higher and start to squeeze out more shorts, get people to close out positions, start going long with any available liquidity they have. And again, as we've talked about, we wrote about this in the Dash report for this month. It's the liquidity trap that is likely building up here. I again want to make it very clear, we are still in cash, guys. We have not been chasing this trade. And while there's definitely great opportunities, there's definitely, if we take a look at the market leaders here, the ones that have been really making the big gains outside of Meta, you've got names like Carvana, an on the verge of bankruptcy car retailer or car distributor that is, again, at a very bad position financially and an over-glutted supply market of rental cars. Or take your other picks here, Peloton, again, the stay-at-home or work-from-home biking company, now starting to make a double return off of its relative lows since back in October, more than doubling from the bottom. And then you really get into the more established names, the oversold names like Meta, which back in November had found a bottom around $88, all the way up now to its recent gap of $188. But I could go on bashing about the smaller cap technology plays that were the darlings of the 2020 and 2021 era during the pandemic, but I'd rather focus in on the more substantial plays, the plays that a lot of people are actually considering buying long-term positions in, the ones that people are feeling real FOMO in, and are thinking whether or not, hey, Nick, is it time to get long on some of these names? Did we miss out on the initial phases? Because I don't want to miss out on the broader bull market, the broader cycle. I think that's a fair question to ask. It's understandable to feel the FOMO when you're seeing these established names making a 23% move in a single day. But I want to ask you all something here, and I want to actually just zoom in here over really the last half of 2022 up here towards February. I want you to think about something here. Is there anything that looks familiar, maybe in the counter direction to what we saw yesterday? I'm going to leave up the chart here, and I want you guys to just think on your own here. Right, just take some time. Does this look familiar to anything we've seen in the past? For me, this looks like the 24% gap we had back in October, where Amazon and Meta, or Facebook, as it's more broadly known as, went down massively on their corporate earnings reports. And what happened after that period of time? Well, we had, as we've talked about here on the channel over the past couple days, the euphoria, or in this case, the fear and the pandemonium and the FUD continuing. We had continued downward pressure for about a week and a half. And then what happened after that? Well, we found our relative bottom. And then after that, Facebook ripped up from around $88 a share to where it is right now in just a couple of months. And as we gap up here, we are steadfast towards approaching the pocket of the 200-week moving average. Now again, I want you to just take a look back over the last decade here. Right? The 200-week used to be a key level of support, a buying support for Meta. And the question is whether or not it can rally beyond that and make it new support yet again. I gotta tell you guys, there's a couple principles that have me concerned here. One, I definitely know there's gonna be some profit taking after making a over 100% return in some of these tech names in a matter of less than 3 months. Excuse me, about 4 months here, because November, December, January, February. Less than 4 months, 100% return, one of the big tech names. And a lot of people who've been holding on for dear life, looking to get out of their positions. But on top of that, we've got the weekly moving averages that we got to be worried about. This is likely going to act as resistance. And last but not least, as we can see here with this gap, it got filled. A lot of people don't understand one really simple thing about equity markets. It's not relevant to crypto because crypto is trading 24/7. But when you get gaps in the market, not always, but about 80 to 90% of the time, those gaps get filled, right? And again, it's not to say that every gap is guaranteed to close. But to be honest with you all, I gotta say, as we get a bit more upward momentum here, as we come up into $200 potentially per share of Meta, I think we're gonna come down, close that gap. At a minimum, for the reason of coming down to see whether or not we can make the 200-day support. So we are definitely looking to buy puts. We are looking to go short when the time is right. We're going to wait for more pain for the shorts, wait for more pain for the short-term bears who are over-leveraged and overexposed, and more people to be convinced that this is the next bull market, i.e. when people capitulate. That is when we'll start to go heavily short in the market. When there's a lackluster amount of momentum, when we start facing some chop up here at the moving averages, we're not rushing to it, we're taking it slow. And there's also something else that I really want to emphasize here, coming back to crypto markets. The thing is that really gives it away for me that this is yet again another deviation is how Total 2 is trading. This is the total market cap for crypto excluding Bitcoin. And man, I gotta tell you guys here, this looks again like what we had back in November, what we had in September, or what we had back in July. A slow deviation above that 200-week EMA that didn't last and wasn't sustainable, where price went right back down below that 200-week. I gotta tell you guys, the lack of momentum and follow-through after Meta gapping up 23%, the NASDAQ gapping up as an entire index 3.25% in a single day. One of the best days we've seen over the past 365 days. And what does Bitcoin do? And what do altcoins do? They sit sideways. In fact, they're actually down yesterday, albeit in a negligible difference. That's not a good sign, folks, because it either tells us one of two things. Well, there is one good thing that maybe could come out of it. If equities, for example, maybe we continue in a bear market, maybe crypto doesn't have to follow. Maybe we're seeing a real divergence between these assets now, a breakaway from the correlation. But the major thing it tells me is that crypto, which is the risk-on asset, which led the rally much faster ahead of equities, is now starting to slow down a bit. And while we might have a little bit of continued follow-through, we might go up to 25, 26K, it's telling me that a lot of that momentum is starting to slow down, that potentially there's more distribution, more sell-side pressure at these higher prices. People taking profits after all of the chaos that ensued from FTX and the collapse in the summer relief rally. Don't get too caught up here. Focus on trying to find the projects that are really exciting. Stay disciplined, preserving cash, do that research, and when we really get those discount opportunities, when we get real capitulation, you guys are going to have some wonderful opportunities in the market. You don't have to chase every single rally. You don't see me here salivating over the price action of Meta or all these tech plays. They were here before last year, and they will likely be lower once again if they can't make those traditional indicators like the 200-week new support. If they treat it as resistance, you have all the right to believe that it's likely going to be rolling back over once again. Or at least that you'll get a lower entry than where it is right now. Now, I wanted to go ahead and just share a few quick announcements real quick, guys, and also some really interesting charts before we dive into the interview with Alex from AngelBlock. I just want to let you guys know I'm going to be tuning in and being a part of a live stream for Crixivia later on this afternoon on their Twitch account, where we're going to be having the tournament going on for Crixivia, as well as some general discussion where people are just going to be talking about the game, playing it, showcasing some of the beta features, going through some of the dungeons. So if you guys are interested, check that out. It's going to be running from the 3rd to the 5th of February. But I wanted to talk about two last interesting charts here. Don't doubt the reality of what's going on with the VIX. We are back in the pocket that each and every time has showcased higher volatility. And this has been building up over the past 5 years. We cannot ignore, more than 5 years now, we cannot ignore the significance of the fact that the VIX is here. And as you all likely know, when the VIX comes up, it's inverse equities. And we should start seeing a correction in valuations. I think we could chop in here for a little while as volatility remains heightened while maybe equities still continue to move higher. But again, overall, in the next coming weeks, we should be expecting that this relief rally is done with and that it's time to start really preparing for the other side of the trade, especially when you start to see that stagnation, that chop to the side. And last but not least, again, natural gas. Take a look at this, guys. Definitely showcasing some downward pressure here week by week by week. However, keep an eye on this one alongside the VIX as well as the Dixie. Those are the three charts, the dollar index, DXY. Keep an eye on natural gas. Keep an eye on the VIX. These are your three charts to know when we are set for a reversal to the downside. It's as simple as that. Keep an eye on those charts. They'll let you know when things are ready to start heading south again. Because while everyone is convinced that inflation is completely dealt with, inflation is incredibly sticky and it will persist if the job isn't done properly until that demand comes down in equilibrium with supply. So anyways, guys, I've rambled on a good amount here. Let's go ahead and dive into the really exciting review we did for AngelBlock. Alrighty, everyone. So in today's sponsored review, I want to spend some time to talk about a crypto fundraising protocol that not only has the ability to radically change the way we think about projects and how they raise capital in the crypto space, which could get rid of terrible things like rug pulls as well as VC or venture capital scams. But on top of that as well, I want to spend some time to talk about a project that I'm proud to stand by as an ambassador, and that is no other than AngelBlock. Now, if you guys haven't heard about AngelBlock just yet, they're aiming to build a new standard for Web 3.0 fundraising, and they're aiming to eliminate a lot of the problems that have been persistent ever since the launch of ICOs or initial coin offerings, as well as the whole wave of launchpads we had in 2021. And it's founded by one of my close friends over the past few years in the crypto space, Alex, who is constantly on the cutting edge of interesting projects and developments within crypto. And he's realized that these issues of fundraising have not only been persistent over the past year, but it's been long-standing issues that need to be addressed fundamentally from a protocol level. And that's what AngelBlock is aiming to do. But before we dive into the experience, where I'll take you guys through the user experience to showcase how easy it is to engage with AngelBlock and all the major checks and balances that they have to make fundraising a better process, as well as talking about the Thol token, which is the native governance and utility token for the platform, I want to go ahead and spend some time to really address how big this issue is. Now, I probably don't need to tell you guys, if you've gone through the process of investing within the crypto space, you've probably dealt with rug pulls before. You've probably found some really exciting token out there that you wanted to buy. You know, there wasn't much ability to do due diligence, so you took the risk and you invested. And lo and behold, the token made some price appreciation along the way and then went absolutely to zero. This problem of rug pulls and the various forms that it can come in have cost over $2 billion, almost north of $3 billion last year alone. And not to mention, this is just the surface issue. We got to talk about a whole wave of other projects that have done the slow rug. The projects that have come out with big promises, they came out with fancy white papers, and they didn't have any incentive after raising large amounts of capital to actually deliver on their ambitions, passing it back to the community. How terrible is this? This kind of mentality has been persistent in the space, and Alex and I, we've joked about this a lot and just how shameful it is for the crypto space that this has been the norm. Now we have an opportunity through tranches, through governance, to be able to allow for not only larger ranges of investors to participate rather than just the institutions, getting in on those early rounds, allowing everyone to have an equal opportunity, but on top of that as well, to allow for quality deal flow that meets to certain requirements before they reach certain tranches of releases and capital. This is a huge thing I've been wanting to see in the crypto space for a long time. And now that I've rambled a good amount about how passionate I am about this, I want to go ahead and spend some time to dive into the AngelBlock platform and talk a little bit about how AngelBlock can actually prevent rug pulls and a lot of the venture capital scams and slow rugs that we've seen over the past bull market in order to have a much more sound and financially stable cryptocurrency space. Let's go ahead and dive into it. So kicking things off, you can see the user experience is incredibly clean. You not only can find a wide range of different projects to invest in as deal flow progresses throughout time, but on top of that, diving into an individual project will feel incredibly familiar for anyone who's used traditional equity crowdfunding platforms or different types of launchpad services. But where AngelBlock stands out is in its degree of transparency, the missing piece when it comes to the crypto space. This allows you to not only get basic details like project description and a white paper, but on top of that, go far into diving into the team, token metrics and economics, and also allows you to understand what kind of goals the company or project has in order to reach its certain tranches of capital, what it aims to commit to. This is a huge differentiating factor, and we're going to talk a little bit more about how this preserves and protects the capital of investors. One of the big things though I like about AngelBlock though is that any project that's coming onto the platform has gone through a high degree of due diligence. There's an actual analysis of the business model, and on top of that, a review of the legal definition of the token as well as the legal structure of the project. I know it sounds like this should be a given in the crypto space, but this is again why Alex and the team are building it. Unfortunately, this standard does not exist in the crypto space. And it is something that we have to start building as a standard if we want to start having quality deal flow or quality projects built in this space without giving our money to projects that are going to rug and run away with the money. So this is a really important step towards filtering down the quality of projects, and is a good reason why, as a platform, AngelBlock can stand out against other types of standard dime a dozen launch pads. Now, if you actually want to go through and making an investment, the really cool thing is that you're able to utilize various stable coins such as USDT or USDC. So the projects are likely to be raising through stablecoin liquidity. And it's as simple as making a standard ERC20 transfer on the Ethereum network. If you've sent stablecoins before, you're able, in this case, to go through the user experience of using AngelBlock. Now, one of the big things, though, that you have to understand is that there is a required KYC process. You're going to have to go through this, and this is standard with practically any equity crowdfunding platform or sensible launchpad. It's for legal reasons, and you have to follow it. And what's nice about it is once you get approved for KYC, you can actually go out and start to make commitments and investments. From this, you'll actually get a custom NFT badge that's going to serve as your unique claim on a position you made in regards to your investment. So this is really exciting stuff, a great use of NFTs that not only in this case is quite rewarding and gamifies the investing experience, but on top of that serves as a means for you to validate yourself as an investor and have weight within the conversation about whether or not projects get to take on the next tranche of your capital. Now, this is where we got to pull to the side here and really talk about this discussion point of tranches. It might sound like a really fancy term, but the concept is really simple. Have we ever thought for a moment that when projects raised $50 or $100 million, that perhaps they don't need all that money right away? They don't need $50 or $100 million, even if they have these ambitions and they're going to need it over the next 5 years or so. Perhaps they don't need all that money right away. That's the case in the vast majority of startups or projects, especially in the tech sphere. And unfortunately, when we see projects raising capital in crypto, they're able to take that $50, $100 million right away. Whether it's a Series A, Series B, Series C round, all the money usually goes to them. Well, in the concept of tranches, which AngelBlock implements natively into the platform, you can have it set where in a given raise, the terms are clear. Through audited smart contracts, we can know that those funds are not going to be given away right away, but rather an initial tranche of, say, $5 million or $10 million might be given. In this case, preserving over 80% of the capital that investors have committed to this idea, this project that's being built. And only when certain goals are met and the investors and participants within the AngelBlock ecosystem feel that that next tranche is deserving of the project, if they're deserving of that capital, then the money will remain in that contract. And it can be returned back to investors if they decide to not continue funding the project. This is a major breakthrough. This practically almost completely prevents the vast majority of damage that could ever come from any kind of rug pull. Not to mention all of the layers of due diligence that you'd have to go through in order to get to the stage where you might be able to cause any damage. And it's not saying that AngelBlock is going to guarantee any kind of returns when it comes to the different projects or investments. It's just a very high level quality filter and has incentive mechanisms that really only bring in quality projects, making sure that the deal flow that you're going to be getting through the AngelBlock platform is going to be much higher than a lot of other different platforms out there on the market. Now, I really love this concept of tranches, but it's not the only thing that makes AngelBlock a really unique platform. One thing I really wanted to showcase for a lot of you here is talking a bit about the governance process for AngelBlock. And this leads us into the important conversation around the Thol token within the AngelBlock ecosystem. Simply put, the Thol token allows you to not only have a wide range of utilities, but its core functionality is giving you access to the deal flow that comes onto the AngelBlock platform and being able to have governance weight in electing validators. But there's all kinds of other utilities. You're able to get deflationary staking rewards and all types of different things that will benefit your active participation within AngelBlock. One of the great things that I think Alex and the team has nailed is that they focused on building a really strong core community and a strong token at that comparative to a lot of other different types of launchpad tokens out there. And on top of that, they've utilized NFTs as a great means to build a strong, dedicated community that is more active than any other type of community I've seen out there, especially at the stage that AngelBlock is at. Not only do they have a really solid design for their 3D NFTs, which again, I think most 3D NFTs, I've told this to Alex, really don't hit home with me. This one, on the other hand, for me was really nice. But on top of that, putting aside the aesthetics of course, the very nice looking NFTs, I think the big thing to focus on is the type of benefits that you get from it. Full IP ownership, access to AngelBlock events and hackathons, bonuses for community members, investors, and startups on AngelBlock, and on top of that, staking rewards for the Thol token. There's a lot of different types of benefits that can come with holding these NFTs, and unlike a lot of other NFT projects that are just, profile pictures or PFPs, in this case, AngelBlock is actively utilizing NFTs as a means of identifying valid, active community members who are participating within the AngelBlock ecosystem. So I think this dynamic of a really strong governance and utility token as well as NFTs gives AngelBlock a really strong position. Now, it's not only the token dynamics here of the Thol token that have me really excited, or the AngelBlock platform itself, but it's some of the major business development that's been going on with AngelBlock. And one of those have been with the developments with Aleph Zero. Now, as you guys have probably heard me talk about in this channel, when it comes to emerging layer 1 protocols, I'm pretty much excited about Radix, and Aleph Zero, and Kava. Those are really my three major protocols that I've been keeping on my radar over the past year. And what's really cool about this is that AngelBlock as a platform has joined forces with Aleph Zero to serve as the premier platform for deal flow and exciting projects that launch on top of Aleph Zero. And for me, this was one of the big things that let me know that Alex was onto something with the team here. Aleph Zero is one of the few exciting layer 1 protocols, and as with Ethereum or different types of L1s like Radix, I'm really excited to see what kind of projects are being built on top of the protocols that have the best tech, that have developers excited, and have therefore builders who could potentially build some really quality projects on top of it. Not to mention, I would feel much more excited to participate in emerging L1 ecosystems like Aleph due to AngelBlock's mechanisms. So this is really a win-win. It's not only a win for Aleph Zero because it's going to guarantee better projects that have to meet to better standards in order to continue raising capital and funding their projects, but on top of that as well, it's going to allow for quality projects to be accessible to everyday investors as well as accredited investors. And this is again where AngelBlock really comes full circle here. The big thing about AngelBlock as a platform is it's not just about democratizing investing. By allowing both retail investors as well as institutional investors, whether it be angel investors or VCs, AngelBlock as a platform allows liquidity to come from all different corners to not only be able to meet fundraising goals, but to provide the community effect that a community round can have, as well as the institutional guidance that angel investors and VCs in most cases can only provide. And this is why, again, I think AngelBlock is incredibly positioned to make a major impact. And I think we learned a lot over the past year in 2022 when we saw that the emperor had no clothes in the industry. We saw the Titan FTX come out and showcase that it had been making investments left and right in projects. It had been double spending effectively its money. This is something that a lot of people still don't know about, but FTX had actually been going out and double dipping with their capital in various projects, taking on excessive risk, and again, playing by the game of a lack of transparency. This is what's been going on in crypto for too long. And if this continues to go on, we are never going to see institutional capital in the crypto space, which is why I'm incredibly passionate about what Alex and the team are building here. I'm not saying that AngelBlock is the only player out there. There's definitely other launch pads. There's definitely other projects out there that are trying to do exciting things, but not to this degree. It's not setting enough of a standard, unlike AngelBlock, which is going out there to really redefine the way we think about fundraising. I highly recommend you guys, if you haven't already, to follow AngelBlock on Twitter, to follow the developments, as the Thol token generation event is going to be on February 15th. It will be available on Uniswap v3, launched out there on the open market. And on top of that as well, if you guys haven't already, go follow the CEO and founder, Alex, who's, as I mentioned already, not only been a long-term friend of mine, but a really exciting guy if you're looking to get some alpha on the space and emerging projects, as he's been around the block in crypto as long as I have in the industry. So again, well over 5 years, 6 years of experience in crypto. But on top of that, the last but not least thing that I'd recommend you guys do, if anything at all, I highly recommend you guys check out AngelBlock, consider KYCing on the platform so you can be ready and prepared when the exciting deal flow comes your way on the platform. I'm definitely going to be interested in some of the upcoming raises on the platform. There's some really exciting developments behind the scenes that are being built at the moment. But again, I highly recommend you guys check out AngelBlock at the link down below in the description. And join the Telegram as well. There's always constant giveaways for those who are active participants, as Alex and the team have a very big focus on trying to get people who are genuinely really excited about what AngelBlock is building. And I dare you guys to find a more passionate community in the Telegram. Everyone's got the PFPs in this case, the AngelBlock NFTs. And again, on top of that, you've got a lot of people who really want to see that standard change in the crypto space. They want to see fundraising improved, and they want to see the quality projects actually get access to the capital they need, rather than a lot of the rug pulls, the scams, and the things that have completely ruined the crypto space over the past few years. It's time for a change. We've got to make the difference, guys. But that's it for today's review. I hope you guys enjoy my rambling here. If you guys are interested, check out the link down below in the description. Consider dropping a like if you haven't already. It's a great way to support the channel. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.